The uranium sector just closed February with a series of bearish signals. But the bigger question now is whether bottoming formation is starting to take shape. In today's update, we'll break down the technical setups for URA, Quad U, and CCJ, analyzing their recent declines and what the Elliott Wave structures suggest about the next potential moves. Are we witnessing the early stages of a major reversal, or will uranium stocks extend their weakness before finding support? With multiple indicators aligning, the coming weeks could be critical in confirming whether the sector is ready to turn the corner. Subscribe now and let's dive into the charts. Let's start with Quad U. What you're seeing here is a fairly bearish closure of the months, or closure of February. So what we are seeing on the 2-day frame, on two months frame, this is a big candle, big bearish candle, and technically it confirms a consolidation and a move down lower. It breaks through the major support line, and technically it follows the path that we outlined way back in March 2024 after Quad U formed 3 black crowns here, and this is the path. So on the monthly frame, we're also seeing a big move here, big bearish candle breaking below the 100 months moving average. So the big two frames are bearish. The weekly doesn't show any signs of recovery. So far it is falling and it's not oversold, and the technical support is there. The only bullish candle is on the daily frame. This is potentially a bullish Harami cross, which with technical support and by being oversold has a good chance for a bounce here. And if you look at the minor frames, a couple of hourly frames, they are also strongly oversold. Big chance that uranium stocks will bounce starting Monday. Speaking about the Elliott Wave formation, this is our chart that we've been tracking since December 2023. So the chart remains intact right now, and now the stock is approaching our midpoint target 377 that we outlined in the middle of February. So far it could be a final destination. It will depend on how the daily frame works and what kind of candles it builds. But at the same time, we have to remember that the monthly and 2 months frame closed with strong bearish candles, and there is lots of work for bulls in order to reverse this trend. Now let's have a look at the other stock that I'm tracking. So this is URA, Global Uranium ETF. What we are seeing here is also strong bearish closure on the monthly frame particularly, and on the 2 months frame. So the weekly is also bearish. However, I'd like to point that for URA, all candles are sitting on major support lines like 200 days, or the red one, 50 months here, and the 20 EMA here for 2 months. However, the candle is not as bullish as, for example, for the Quad U. This is a thrusting line which is often viewed as a bearish continuation candle. So I wouldn't be very excited about this one until I see a very strong reversal here. Unfortunately, I don't have a reliable chart right now for URA, and I'll try to make one for the next update. And I'm jumping right into CCJ, Chemical Corporation, what they are thinking here. So that's the closure of the monthly frame was very strong bearish, and as you can see, Chemical broke through the 2 support lines, the 8 months and 20 months EMA. But at the same time, on the 2 month frame, it formed a bearish candle. However, it's not as bearish as it could be. And on the daily frame, similar to what URA made a thrusting line. Potentially, it could be a reversal, potentially. However, we need to see how it closes on Monday, Tuesday. And I would like to emphasize that here we have some contradicting signals, and we don't know yet how they are going to work out. So this is the 50-day over 200-day moving average. They are about to cross, make a death cross on the daily frame. At the same time, we are seeing that on a monthly frame, the 100 months moving average moved over the 200 at the closing print, and right now it is officially a golden cross on the monthly frame. So it might work, and most likely it will work. However, in our case, we still might see a decline here, or even to the 100 months moving average, until we see a recovery here. That's the possibility. Let me make it a more visible potential line here. So this is one potential path, and another one, I'm thinking about this one, finding support at the 50 months moving average, potentially. So after breaking this one. So these are two possible paths, and technically the line here, the golden cross will still work. However, it would take time, a couple of months perhaps, until Cameco finds support. And speaking about the chart that we discussed last time, this is the chart we shared with our subscribers on February 17 when Cameco was 47. Right now it's 44. Lost a little bit. So far it is moving down. We think that there's a possible that there's a big wave that started in March 2020 finally completed, and Cameco has a possibility, a good chance to form wave 2, which will be somewhere ending somewhere between 34 and 17. Well, that's a bit overstretched. However, that's a very good possibility based on Fibonacci levels. That's the perspective for now. Cameco is moving lower, and that's the perspective for uranium. Just to summarize, after a bearish February, uranium stocks are approaching key support levels, and the technical setups hint at a possible bottoming process. However, this is only on the short-term bottom. For the short-term bottom, for the long-term, it looks like they might have to move a little lower before they find support. But this unfolds into sustained recovery or another leg lower, then next moves from URA, Quad U, and CCJ will be decisive. We'll continue to monitor the sector closely in our reports. Stay connected for real-time Elliott Wave analysis and market insights. And next time, as I promised, I'll try to get the URA chart available for everyone. Follow us on YouTube, Twitter, Telegram, Reddit, and at investingangles.com. Thanks for watching and happy trading.